It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Trade friction drags on. China blames the U.S. for causing, quote, unneeded panic. Secretary Bessent floats extending a pause in tariffs. AI confidence alive and well. TSMC boosts its sales outlook, signaling confidence in demand. And that tech optimism outweighing concerns around trade, it would seem. Stock futures pointing higher as investors await a raft of Fed speak. So we might be breaking our trend of up day, down day here, because we obviously finished higher yesterday, even though we tried not to. But the S&P 500 was up 0.4%, the Nasdaq 100 up 0.7% by the end of the session, and we look to be pointed higher once again today. On the equity side of things, have to say it's earnings. It's TSMC talking about strengthening its conviction in the AI mega trend. It's all the bank earnings beating estimates and so on. But let's take a look at the bond board. We are seeing yields just that tiny bit higher, particularly at the front end. We're at 349 now. 402 on the 10-year. We are in a data vacuum, obviously, but we got the beige book and it confirmed that trend of gradual slowing in the U.S. economy. Let's take a look at gold and oil as well, because stories there continue too, with gold hitting more than 50 records this year. It hit another one this morning. It's just off that record now, about $8 off that record. But as you can see, continuing to rise. As for oil, we are putting on a few cents, but New York crude still below 59. This idea that President Trump is saying India might back off Russia imports of oil, maybe there's a little skepticism in the market about that. And I did want to point to the VIX as well, because we're still above 20 on that score. All right, let's take a look at some individual market movers now. And for that, we'll go over to London and Valerie Teitel. Good morning, Valerie.
Good morning, Ivani. Let's start with a check on tech. TSMC out with some decent results overnight. We're seeing the ADRs trade higher in the pre-market, up over 2%. And this comes after the world's largest chip manufacturer booked a 39% surge in profits. The net income for the quarter coming just shy of $15 billion. Now, TSMC covets Apple and NVIDIA as its main customers. This is really showing the health of the AI trade. The beats from TSMC follow on from the beats from ASML yesterday. Let's move on to the airline industry. United Airlines coming out with a pretty decent set of results, Vonnie, but shares are trading lower in the pre-market, down just shy of 2%. We had a note from Bloomberg Intelligence saying that perhaps their results are showing some signs of saturation, especially when it comes to those premium seats. But remember, United has been on a tear since the hot Delta earnings last week, so probably just showing a bit more about the enthusiasm for the airline industry of late and that recent stock rise, more than disappointment in the earnings. Lastly, I want to touch on American battery technology. Not one we normally talk about, Vonnie, but this one is kind of a sign of the times. The shares are down 24% after they lost a key government contract after an audit. And this is just another sign of the Biden-era green policies being rolled back under the Trump administration. Vonnie?
Yeah, absolutely. Valerie, thank you so much. Valerie Teitel there. Later this hour, we're going to be speaking with Saidel-Baker of ITR Economics as she sees rising inflation risks in the United States. Let's get back now to our top story. Treasury Secretary Scott Bessent floating a calming measure in the trade war with China.
Right now, we are currently in a 90-day roll on the tariffs. So is it possible that we could go to a longer roll in return for a delay? Perhaps. But all that's going to be negotiated in the coming weeks.
Still, Beijing's Commerce Ministry accusing Washington of the escalation in the dispute, saying in the latest briefing that China was forced to take countermeasures against the U.S. due to the U.S.'s negative attitude. Joining us now is Bloomberg Chief Asia Correspondent Roz Matheson. Roz, did we just get some kind of confirmation, at least from the U.S. side, that this truce will be extended? The deadline, once again, is next month.
Well, certainly the US seems to be opening the door to extending it. And as you were just hearing, Scott Bessent suggesting that if China walked back some of its measures on rare earth restrictions, that the US would be willing to perhaps entertain a longer role for that trade truce. But beyond that, the real question is, at what point do we get to a fundamental trade deal between the China and the US? Is that something that's really going to have to require Xi Jinping and Donald Trump, the two leaders, to sit down later this month in Asia and hammer out the terms of a proper trade deal? Do they really want this thing just to keep rolling over and rolling over every 3 months or more, and always with the threat, of course, that tariffs then do really come in on either side? I mean, China's leverage in this really is in the rare earth space. This is the thing that they have on the table. Would they really want to pull back some of that just to get an extension of the truce, or do they want that to be their leverage for something more fundamental and long-term in terms of the trade relationship between the countries? I mean, obviously the risk is these tariffs do really come in force at some point, and that's always there when you don't have a proper trade deal. But with all this noise and rhetoric and accusations that are going back and forth and tit-for-tat action, are you at the point where you don't create the space for Donald Trump and Xi Jinping to come to a proper agreement later this month in Asia? You know, it seems that meeting is going to go ahead, but is there space for it?
Well, there's so much aggression right now, and if we need those rare earths, if we don't have an alternate supply yet and we can't recycle our own rare earths, where is the carrot in all of this? I'm seeing sticks on both sides, but no carrots.
Well, that's the thing. I mean, obviously, China does want things from the US. It's not just an entirely one-way street here. China has that leverage around rare earths, but the US does have some skin in the game, and that's also for China in the tech space and some of the access to high technology. And China does need markets. You know, it has diversified a lot. You can see that in its latest trade data. It's been selling a lot more to other parts of the world, but nothing really truly compensates for having the US buy Chinese goods. And so there is a need there and an imperative for Xi Jinping to keep his domestic economy on a stronger footing, because that's all about his power and control at home. So there is an aspect of that. But again, the problem is with all this noise and rhetoric, is it just negotiating tactics, or is this going to create space for the two leaders to come to some kind of agreement?
Roz, also happening this week, a meeting potentially with He Lifeng between Tim Cook and some other global CEOs. They're on an advisory board to Tsinghua University. And this happens every year, but there will be a message either delivered or taken away this year, surely.
Well, that's right. And you've got, of course, executives with a lot of skin in the game, too, in how this relationship plays out. You know, big US companies wanting access, market access, and Chinese companies wanting the same. And, of course, Donald Trump has formed quite a close-knit group with some of these senior US executives, again, in the tech space. Do they get in his ear and say, this is what we really need from this? And so do you see He Lifeng pass a message potentially from China to these executives and onwards? I mean, we should also note that Scott Bessent says that he plans to meet with He Lifeng one more time before the end of the month. So what it does show is that despite all of this noise and rhetoric, the lines of communication are kind of open, and there's been periods in the past where they've been completely shut. So at least there are those exchanges happening and the ability to at least sift through the noise and get a proper message delivered to each other.
A silver lining. Roz, thank you so much. That is Roz Matheson there for us. Over in France, Premier Sébastien Lecornu appears set to survive 2 no-confidence motions today after planning to suspend a pension law to win support. Take a listen.
C'est pourquoi je proposerai au Parlement dès cette...
This fall, I will propose to Parliament to suspend the 2023 pension reform until the presidential election. No increase in the retirement age will take place from now until January 2028, as specifically requested by the CFDT union. In addition, the duration of work taken into account will also be suspended and remain at 170 quarters until January 2028.
That vote ongoing now. Joining us from Paris is Bloomberg's Julien Pontus. So, Julien, he did manage to win the support of the socialists. He obviously will probably never have the support of the National Rally or other extremist parties. But does he survive? Does France at least have a government?
Yes, well, the vote, we've been very busy doing the math with our bureau chief, Alan Katz, and making sure that there are enough votes. It's still a bit of a gray zone, so expectation is that the government will survive this vote. But it's a big gamble to get the socialists on board, even though they have offered to suspend the pension reform. The big question is whether they can keep the backing of the socialists throughout the budget process, which is actually really not a given.
Very briefly, Julien, we have a credit ratings agency review next week. Does France keep its credit rating?
Probably not. There will be some kind of downgrade down the road. That's a given. The big question is, will markets care? Because the rating won't reveal anything particular. Everyone knows that France has dire problems in terms of its public finances. So at the moment, I think markets could actually see if the government pulls this through. As they would rather see the glass half full with some stability than the glass half empty with the suspension of the pension reform, which is going to weigh on public finances.
All right, well, that OAT bund spread still at 78, so better than it was. That is Bloomberg's Julien Pontus. Thank you. One stock we're keeping an eye on today, TSMC, hiking its projection for 2025 revenue growth to the mid-30% range, sending a strong signal of confidence in demand for components like NVIDIA chips that power AI. For more, we're joined by Matt Bloxham, Senior Technology Analyst for Bloomberg Intelligence. So it seems to be all go on AI. Is there anything that can stop this train, according to TSMC, Matt?
At least not in the short term, no. I mean, obviously at some point there needs to be a much bigger natural demand for all this AI technology investment. But yeah, for now, encouraging signs. And I don't think it's really so much the revenue number that people were kind of really cheered by today, although it's encouraging and there's certainly some upside to estimates for Q4. I think what really took the eye was actually the kind of profitability. So both gross margin and operating margin exceeded analyst expectations in the quarter by maybe 2 to 3 percentage points, and by a similar level for the 4Q guide. So I think that's really encouraging for people. Not only is revenue outperforming, but they're making more money off of that revenue too. And I think that's down to the fact that they're getting their fabs much more kind of efficient in how they're producing these chips for their core clients.
We'll watch how it trades today. ADRs are up around 127% since Liberation Day. Matt, the other story I wanted to ask you about is that Apple has lost its head of ChatGPT, the AI search effort for its phones. That person is leaving for Meta and had only just replaced another person that left just some weeks ago. Is this a ding to Apple's reputation, or is this actually something that will be very material in Apple trying to effectuate this change?
Yeah, this is almost kind of a bit of a throwback to a story from a month or two back, when Meta was really spending big money to attract as much AI talent to Meta as it could. And I think this kind of really reflects on that trend. I think at the time Apple said that they weren't really in the market to kind of match these big payouts that Meta was offering. And obviously there's been a huge number of shakeouts in staff and the focus of Apple's AI strategy. And I think this is really just a kind of reflection of that still kind of working its way through the system. Obviously, Apple's AI strategy has kind of shifted significantly from the early days, and they're kind of much more partnering with third parties than developing their own internal technology. And yeah, I think this is a reflection of that and just aligning the staff with that revised strategy.
Matt, thank you as always. That is Matt Bloxham of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. Nestlé shares are surging after the food maker posted stronger than expected increase in quarterly sales. It also announced plans to cut 16,000 jobs. That's about 6% of its workforce over the next 2 years. Citadel founder Ken Griffin says generative AI is not helping hedge funds produce market-beating returns. Speaking at a conference in New York, he said Gen AI falls short in uncovering alpha. Griffin has previously made other skeptical comments about AI, calling it a limited tool. President Donald Trump says Indian Prime Minister Narendra Modi has agreed to stop buying Russian oil, signaling a possible resolution to an issue at the center of the diplomatic and trade rift between Washington and New Delhi. Here's what he told reporters at the White House yesterday.
If India doesn't buy oil, it makes it much easier. And they're not going to buy. They assured me they will, within a short period of time, they will not be buying oil from Russia. And they'll go back to Russia after the war's over.
Coming up, we'll bring you our conversation with IMAX CFO Natasha Fernandez, the latest episode of Bloomberg's Chief Future Officer. Next, this is Bloomberg. This Here's Bloomberg Brief. I'm Bonnie Quinn in New York. In the latest episode of Chief Future Officer, Bloomberg's Scarlett Fu profiles CFO Natasha Fernandez of IMAX. She's spearheading the company's efforts to grow its network of film systems and to expand its content offerings, as analyst sentiment for the shares is the most bullish in at least 5 years. Take a listen.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more. But I don't think we need 10 because they won't always be in use all the time.
Making challenging CapEx decisions is an annual exercise for the CFO.
We do sit with the R&D and technology teams and look at what would be the amount of capital they need in a year. So say I earmark them and say, if you had $15 million, what would you spend the $15 million on? And then they would allocate and say, and then you start to pressure test the projects that they say. And then you bring the $15 million down or up, depending on if there's a special project.
I heard the term pressure test from you, and I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Down the hall from the camera facility is the Network Operations Center. In this room, IMAX stays on top of real-time system performance data from around the world.
Our NOC Center essentially monitors our worldwide global network to make sure everything is working, that the reliability rate is maintaining a high percentage, and that our quality standards are being met. To me, it's all a very good investment, and actually it's a very healthy part of our business when you think about our maintenance margins. January 1 every year, I know we have $60 million of revenue. And how do I know that? Because we charge a fixed fee to our exhibitors. And so as our network grows, that dollar value immediately goes up, but it's a recurring revenue stream to us as well. So it's not, it funds itself. It is a high operating margin business, and it also protects our brand.
Our final stop required a costume change. We put on hazmat suits to enter a clean room, where IMAX assembles optical components for projectors. Fernandez oversees financials for a manufacturing operation that sends equipment to some 90 countries.
We do everything here, so even if something is getting sold by IMAX China or IMAX Ireland or one of our other entities, it is all getting built here, shipped out to those entities, then shipped over to the customers.
IMAX is a Canada-based company, and the manufacturing is done in Canada. How affected by the U.S. tariffs are you?
We've always been subject to tariff risk, currency risk, geopolitical risk, supply chain volatility, because we're a global company. And we actually source components worldwide as well. And so working through all of that, we've spent decades already building out and assessing what our risks are and weighing those. The immediate risk, obviously, with the U.S., I have been working closely with the supply chain group and working through what strategies could we do.
That was IMAX CFO Natasha Fernandez speaking to Bloomberg's Scarlett Fu, and you can find the full episode on YouTube. Now let's look at these markets going into the Thursday session. We are pointed higher for futures. This on the back of earnings. TSMC, the latest to come out and give a very, very upbeat forecast for AI demand. As you can see, S&P futures higher. We might even break the streak of up day, down day, because we had an up day yesterday, although markets did try to sell off. Didn't quite make it though. The dollar index weaker once again today. We have sterling stronger, the euro stronger, albeit at 116.60, and we have the yen weaker. It is at 151.32 today. The 10-year yield at 4.02. We did see just a little bit of a gain at the front end, more particularly after the beige book yesterday signaled continued weakness in the outskirts economies of the United States. Coming up, the Trump administration planning an IRS overhaul. More on that and what else is making headlines in your front page news next. This is Bloomberg. Time now for your front page news. First up on the Wall Street Journal, the Trump administration has a plan to overhaul the IRS. This according to sources. The changes would allow the administration to pursue criminal inquiries of left-leaning groups more easily, according to those sources. A senior IRS official says it is to be drawing up a list of potential targets that includes major Democratic donors. Next up on the Washington Post, President Trump says he has authorized covert CIA operations in Venezuela. It's a sign of escalating pressure on President Maduro following a string of lethal strikes against alleged drug trafficking boats off Venezuela's coast. And on the New York Times, President Trump is considering an overhaul of the refugee system that would favor white people. The proposals would transform a program aimed at helping the most vulnerable people in the world into one that gives preference to mostly white people who say they are being persecuted. Trump had suspended refugee admissions on his first day in office. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Trade friction dragging on. China blames the US for causing what it's calling unneeded panic. Secretary Bessent floats extending a pause in tariffs. AI confidence alive and well. TSMC boosts the sales outlook, signaling confidence in demand. And that tech optimism seemingly outweighing concerns around trade for the moment. Stock futures gain as investors await a raft of Fed speak. So we're pairing those gains ever so slightly, but we are seeing the Nasdaq 100 and the S&P and the Russell for that much pointed higher, which means that we might actually break our string of up-day down days. Now the VIX is still above 20, so anything could happen obviously throughout the session. We've seen very choppy sessions recently, but we are seeing confidence from better than expected earnings reports for the most part, even as we just really begin earnings season. Let's take a look at the bond universe because the front end did move up just a little bit. In fact, the 10-year yield up to 4.02 now as well. Softer data out of the beige book, just underscoring that gradual softening narrative. And then if we take a look at gold and oil, we've had more than 50 highs for gold this year and we continue to rise today. We're off the record that we set earlier, 4,240 plus change. But we're not that far off it. Crude just putting on 30 cents after Donald Trump said India might suspend Russian oil buys. And as I said, the VIX still above 20. Let's get to some individual movers now. Over to London and Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with a check on TSMC, the latest technology company to be out with results. Shares are higher in pre-market trade, just shy of 2%. The company had a decent string of beats here, Ivani. They had a profit rising by 39% in the previous quarter. Net income just coming shy of $15 billion. This enthusiasm around the AI trade really doesn't feel done yet with these earnings from TSMC coming after some strong earnings from ASML. So it does seem like the AI trade and the demand behind it is holding up quite well. Let's move on to the airline industry. United Airlines also out with earnings after the bell yesterday. Now, it was a decent beat when it comes to their earnings, but the shares are lower this morning, down 1.6%. Bloomberg Technology noting that their earnings did show some signs of saturation, especially when it comes to their premium seats. But, Vani, the airline industry has performed very well since the big Delta beat of last week. So keep that in mind with United Airlines on a back foot. Lastly, let's end in the alternative energy space with a check on American battery technology. This is not normally one we talk about, but they lost a key government grant due to an audit, and shares are down 23% in pre-market trade. Vani, this is just another sign of Biden-era green policies being rolled back under the Trump administration and some losers and winners off the back of that.
Absolutely, for sure. ABT, a big loser today's session. Valerie, thank you so much. Valerie Teitel there. Lauren Saidel-Baker of ITR Economics seeing inflation rising into next year, writing, quote, a still tight labour market keeps upside pressure on wages, energy costs build, and previous fiscal and monetary policy spur higher inflationary pressures. She joins us now. She's economist at ITR Economics. So, Lauren, just let me ask you first of all about this tight labour market. So, for sure, we're not getting, official data. We're maybe going to get it late, but we haven't got it for now. And we are seeing softening data, and we have the Fed chair talking about what he's seeing as fragilities in the labour market. The latest just now, searches for seasonal jobs up at the end of September compared to a year ago. So, obviously, people are looking for jobs for the holiday season, and there are few full-time roles to be had. Why do you think this labour market is tight?
That's exactly right. On the one hand, we do see reduced hiring needs from companies. There's just so much uncertainty out there that there is some amount of pullback in the types of roles being created. But on the other hand, we also have a pullback in labor availability. So beneath the surface, there is a lot going on. The types of roles that are out there, skill sets, I think there is something of a mismatch between where we need jobs and where we have available workforce. But at the end of the day, if we just take all averages, today there is still about a 1-to-1 ratio between the number of jobs posted out there and the number of unemployed job seekers. So to say this labor market is looser, yes, that's true. Back in 2022, that was a 2-to-1 ratio. There were 2 jobs for every 1 worker. But today, I see this as coming a little bit more in balance with just hesitancy on both the job creation and the job seeker side of the equation.
So what does that mean for the Federal Reserve? Because clearly the chair is concerned about that side of the mandate. Does it mean that perhaps we do get more cuts?
At the moment, that seems to be consensus. So members of the Fed, a lot of Fed speak, it's really shifted toward that labor side of their dual mandate. I'm personally more concerned about the inflation side, as you led with in that note. There are pressures building beneath the surface. They're not on our doorstep quite yet, but they are really coming in the tail end of this year, certainly in 2026. So those 2 forces, those 2 sides of the dual mandate, they're in opposition at the moment. That's a tough place for the Federal Reserve to be, and it really just comes down to the choice. Where do you see the greater problem?
So would you have the Fed cut more then? What would be your preferred rate path for the next 3 to 6 months?
I'd never presume, but at this point, I think we'll probably see 1, maybe 2 more rate cuts in the very near term. Again, inflation is coming in broader strokes next year. So by late 2026, I would not be surprised if rate hikes are back on the table, if we're talking about an upward movement in interest rates, not continued downward movement, given that we expect net outflows of immigration this year, given that the labor market, again, it's not in the best position we've seen, but it isn't that the bottom is completely falling out. I think that inflationary pressure is really what we're going to have to focus on in order to keep somewhat balance on the 2 sides of the dual mandate.
And Lauren, I want to point out that you see this inflationary pressure building, even putting tariffs aside. So, that's definitely one extra part of it. But before we even get there, you're talking about the tight labour market, wage pressure, previous fiscal and monetary policy, and energy costs building because of AI.
Yes, AI and data centers are really spurring higher energy costs, higher electricity costs. The U.S. has historically been a place of relatively low electricity costs. Our plentiful natural gas has been keeping those costs low, especially for businesses, manufacturers, for example. I read one estimate that pre-2020, the average cost of electricity in the U.S. was half the level of Europe, 1/3 the level of Asia for a typical manufacturer. So this is still an advantage that we have here, but not so egregious as it had been. And these data centers are just so power hungry. We do not have enough capacity really to keep pace, especially where the interest is, which is not fossil fuels, but new, cleaner types of resources.
Well, if that is part of the inflationary pressure that we get and that we see into next year, does the Fed have cover to focus more on the labour side of things and cut rates even into that environment? Because it has tended in the past to look past any kind of inflation that comes from energy inflation.
That is certainly one component. Now, to say they can look past that, look past say it's a one-time step up. That's the wording we sometimes hear in terms of tariffs. Then we still have this wage cycle happening. Again, there is so much liquidity out there. If you look at things like Treasury issuance is highly correlated to future inflation, and that is quite elevated today. Things like the money supply on the rise again, things like even the velocity of money picking up steam. So there are more broad-based inflation drivers. It's not just one thing happening right now.
Lauren, what happens if this, truce doesn't get extended on tariffs and the China war becomes, lengthier war? Maybe we don't get fully 130% tariffs on China, but maybe relations are not that warm still.
So China's share of our imports actually has already been decreasing. So I would say the overall exposure is not quite so high as it would have been 5, maybe 10 years ago. However, all of these tariffs since the Trump administration came into office, it's been, I call it 2 steps forward, 1 step back, right? We've had an announcement of tariffs, then a renegotiation, then tariffs are back on, then a court pause. So it's almost part of the process at this point. I think businesses know that. They're being a little bit more tactical than they have in the past. At the end of the day, this is all upside on pricing, but it's taking a lot longer for that pricing to flow through to final goods.
So, Lauren, if you were to look into the weeks coming up to Christmas, and obviously, we've been placing a lot of store by earnings beats, do we get another quarter like this, or is this the last quarter where we can enjoy this kind of beat on corporate America's part?
I think the challenge for businesses going forward, it's just going to be margins. We see that building pricing pressure. I think it will be easier to push higher prices through, but on the cost side of things, that is getting dicier and dicier. So I fully expect a little bit more divergence between the winners and the losers, those companies that really can manage that margin pressure and those that are maybe focused too much on the top line and missing something beneath, down in the weeds.
Lauren, thank you so much for your time this morning. So appreciated. Lauren Saidel-Baker of ITR Economics. Now to other top stories trending on the terminal this morning. Nestlé shares are surging after the food maker posted stronger than expected increase in quarterly sales. It also announced plans to cut 16,000 jobs. That's about 6% of its workforce over the next 2 years. Citadel founder Ken Griffin says generative AI isn't helping hedge funds produce market-beating returns. Speaking at a conference in New York, he said Gen AI falls short in uncovering alpha. Griffin has previously made other skeptical comments about AI, calling it a limited tool. President Donald Trump says Indian Prime Minister Narendra Modi has agreed to stop buying Russian oil, signaling a possible resolution to an issue at the center of the diplomatic and trade rift between Washington and New Delhi. Here's what he told reporters at the White House yesterday.
If India doesn't buy oil, it makes it much easier. And they're not going to buy. They assured me they will, within a short period of time, they will not be buying oil from Russia. And they'll go back to Russia after the war's over. All
right, coming up, Secretary Bessent mulling an extended tariff truce with China. Your trade update next. This is Bloomberg. Some breaking news out of France. French Prime Minister Lecornu has survived that first no-confidence motion. So once again, France's Prime Minister Sébastien Lecornu surviving that no-confidence motion. We are seeing French bonds pare their losses, and the OAT Bund spread is now below 78 basis points, 77.40 to be exact. So there is a little bit more enthusiasm and optimism that at least the government looks to be surviving. It is not going to be toppled. So the first of 2 no-confidence votes now passed. There will be a second one, but with the support of the Socialist Party, it looks like Sébastien Lecornu will stay on as the French Prime Minister. Treasury Secretary Scott Bessent floating the possibility, meanwhile, of an extended trade truce with China.
Right now, we are currently in a 90-day roll on the tariffs. So is it possible that we could go to a longer roll in return for a delay? Perhaps, but all that's going to be negotiated in the coming weeks.
This as Beijing accuses Washington of having a, quote, negative attitude and acting to restrict China. Let's bring in Bloomberg's John Harney in Washington and our chief Asia correspondent, Roz Matheson. Thanks to you both. So, John, the war of words just continues. Do we expect to hear more out of Washington today?
Almost certainly. Here we have yet another extension in this trade disagreement, negotiation, confrontation, and it's somewhat analogous, I think, to the shutdown, the government shutdown we have here in Washington. It is now in its third week. Neither side wants to be perceived as weak or do anything that would would give the other side an advantage. So both, as this whole disagreement over rare earths proceeds, both sides are digging in for the moment, but yes. we have perhaps this new extension.
So, Roz, how much intransigence, to John's point, is there actually? Is there any willingness behind the scenes for either side to move?
Well, what we do know, despite all this rhetoric and these accusations and these tit-for-tat actions, is the lines of communication are open. Officials between the US and China are continuing to talk to each other and to do so, at a fairly high level. So at least there are messages being passed back and forth. But to John's point, they're each very much coming into this saying they need to be emerging as the winner. Xi Jinping cannot appear weak at home. Donald Trump will want a victory. And as they get very much in their corners on this and as these retaliatory actions pile up, it does make it harder to create the space for a fundamental conversation around a more lasting trade deal, let alone extension of the truce. And as China's coming out today, again accusing the US, saying it's you who are pushing us. Your actions are forcing us to take these retaliatory responses. And so putting the ball back in the US court yet again. But through all of this, just to make the point that dialogue is going on, it does seem as though there is a belief that the meeting between Xi Jinping and Donald Trump will actually happen later this month. And is that the point where we do finally get a proper deal?
And then we have Bessent showing his temper once again and trying to sow maybe discord within China. Somehow he lashed out at a top Chinese trade official, saying he turned up in Washington back in August uninvited and behaved in an, quote, unhinged fashion. Just take a listen.
Perhaps the vice minister who showed up here with very incendiary language on August 28th has gone rogue and said, quote, China will cause global chaos if the port shipping fees go through.
So we have his side of things, Roz. We can't know exactly what happened, but is taking pot shots at Chinese Communist Party officials like this wise?
Well, it's interesting because, of course, this is the China Vice Commerce Minister Li Changfeng, who is a very experienced trade envoy. He's known as a man of substance. He's a hard negotiator, but he's certainly not the type to go off on sort of random comments. And it's interesting to see that Scott Bessent has latched onto things that he said that Li said and accusing him of essentially wolf warrior diplomacy, which is a pretty big comment to make. I mean, China is sort of brushing this off today. They're saying they don't agree with the characterization of Li, who again is probably their most important trade envoy and certainly not someone to fly off the handle. But if he did make comments like that, that would have been unlikely to be done without the understanding and the agreement of people even above his head in China. He's unlikely to say something that would be characterized as rogue unless he was pretty confident that Xi Jinping would endorse him. So again, is this kind of just part of the soup of all these rhetorical statements being made, accusations flying, and we need to look, beyond that a bit in terms of fundamentally what is it that Xi Jinping and Donald Trump might be able to achieve if they do sit down later this month.
Exactly. And he's also, by the way, the executive who met with Tim Cook, as you know, this week. So, very high up there. John, let me ask you about the US government shutdown as well. We're now into day literally 16. The military is getting paid, but that's about all we know. What's the latest? Any signs of hope?
Well, as with China and the U.S., both sides are pretty intransigent, are pretty, pretty firm in their positions right now without and too much negotiation or talks between Democrats and Republicans, the White House and Senate Democrats. It could well go on for some time. Now, a judge yesterday said that the Trump administration could not fire government workers as it has been doing during the shutdown, and put that off at least temporarily. So here you have another attempt by the Trump administration since its beginning, the second Trump administration, to diminish the size of government by getting rid of workers and even entire agencies being suspended temporarily, perhaps by the courts.
John, thank you so much, and thanks to both of you. That is Bloomberg's John Harney there and Roz Matheson. Thank you. Turning to tech now, TSMC reinforcing hopes in the longevity of a global boom in AI spending by raising its 2025 revenue growth outlook for the second time this year. Matt Bloxham of Bloomberg Intelligence is back with us. So Matt, where is the custom coming from? How are we continuing to get positive outlooks like this?
Yeah, that's right. So just for context, they've now saying revenue growth this year will be around 35%, and previously they've been talking about 30%. Now, I think there's a little bit of upside to consensus, but I think to a degree anticipated given the backdrop of strong demand. Now, most of this incremental demand is really coming from the AI boom, and in particular, NVIDIA is a big customer of theirs. So it's really those kind of AI chips that's driving it, but obviously big customers like Apple, important part of the demand mix too. So it's a mixture of things that are coming through. Yeah, I think the other thing that was interesting and encouraging in the results was the profitability, both at the gross margin and at the operating margin level, was better in Q3, and they raised the guidance on that for the fourth quarter too, by about 3 percentage points for both on average. So that's encouraging too, that not only is the demand there, that they're making more money off the revenue that's coming into them.
You know, you mentioned Apple, and another story that's catching my eye is that the head of its ChatGPT-like AI search effort has left for Meta. And it's not the first time that we've seen a story like this, even in recent weeks. Does it really hurt Apple's chances at being efficient about doing this, about getting its AI search effort up and running? Or can his boss just take over?
Yeah, I mean, obviously, Apple's made a lot of changes to its AI strategy over the last 6 to 12 months, and we've seen some people depart. And obviously, Meta's paying big bucks to people to secure the best talent in the market. And I think Apple's been happy to let some of these people go, partly because it's not prepared to match the huge salaries that's on offer at Meta, but also because their strategy has changed. Obviously, they're working much more closely with third parties to deliver a lot of their AI capability. And so I think this is a reflection of that shift in strategy and realigning their staff and their key leaders around that revised strategy.
Matt, thank you so much. That is Matt Bloxham there of Bloomberg Intelligence. Coming up, a slew of Fed speak on deck in your day ahead. We'll get you prepped. This is Bloomberg. Now, a look at what's ahead for your Thursday session. Earnings continue. We have BNY Mellon, US Bancorp and KeyCorp. They're all coming before the bell. A host of Fed speak today with Waller, Barr, Bowman, Myron and Kashkari all on deck. Plus, ECB President Christine Lagarde is speaking at the IMF at 12 p.m. Eastern, so we'll be watching for comments on the European economy. Let's get to some earnings movers now. Salesforce adding to gains post-earnings, up 6% in the pre-market. It obviously projected a return to double-digit revenue growth, and that's very much pleasing investors. Hewlett-Packard Enterprises, well, it's down. Its annual profit forecast missed estimates on that margin crunch that is so sensitive right now. And United Airlines, although we have had a run-up for the airlines, it is down almost 2%. It fell despite forecasting resilient demand. Bloomberg Intelligence noting that results show signs of saturation. This is your macro picture for the day, so get strapped in. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.